In this episode of The Market Moment.
Are we on this mission with Elon to just prove that things can be done? Or are we actually building businesses that are going to make a lot of money and be great investments?
All thoughts and opinions shared in this recording belong to the participants. This podcast is meant to inform and educate and should not be seen as solicitation or endorsement for business.
Welcome to The Market Moment. This is Matt here with Eli.
As always, happy to
And-
be here.
You get me every time. And Isaac.
Good morning.
The delay gets me every time. How we doing?
Oh,
Great.
fantastic.
Doing great.
Good?
Yeah.
That's coming from two guys with little kids at home. So
Look,
that's
when they sleep, life gets good.
Yeah,
Sleeping?
when Isaac's kids life gets good.
Yeah. You just wait only like 2 more years.
hey, we all have little kids. We can just have like a little therapy session here if we need to. Just support.
And the viewership will drop.
Yeah, it's okay. It's all right. If it's what we need, we can do it. All right. Well, glad you guys are doing well. So, big news this week. Big event. If you haven't been, if you're not aware and you don't already know what I'm talking about, then you haven't turned on the television in a very long
Is
time.
it Annuity Awareness Month?
Annuity Awareness Month. I just found out 3 minutes ago that that's a thing from
Okay,
you.
I'm totally kidding.
So, so that's the second most exciting
It's like the
thing.
most exciting thing.
But the SpaceX IPO this Friday.
Mm-hmm.
Big deal. Handful of clients asking and
Mhm.
talking about it. Not a ton. I mean, there's not been this like mad rush of clients who are interested in it, but there's been a handful.
Yeah.
So we've had some good conversations around that. But we just want to spend some time. You know, I think we'd all be the first to admit like we're not the experts when it comes to IPO markets,
Mhm.
understanding how this IPO is different than historical. We have some context and some data that we can talk through that we will talk through. But a lot of this is coming from other experts who live in this space and live in this world. So we're just kind of relaying some of that we found to be really interesting because it is a historical biggest IPO. I mean, they're looking to raise the most money ever. Come at, IPO to valuation of 1.8 trillion. It wasn't that many years ago. That would have been bigger than the largest company in the world.
Mm-hmm.
And now we have a company IPOing at that level, right? Which is just incredible. So
And
a
one
lot.
thing,
A lot
one
to
thing that's
digest.
interesting to note that you said if you haven't heard about this, and I agree, it's just about everywhere. And whenever something is everywhere, you have to ask like what is the reason, or why are we hearing about this from every different angle?
Yeah.
Well, one of the pictures that I've enjoyed is all of the banks that are backing this IPO, and it is basically every major bank that has their shoe in some portion of this deal. They had shares that they purchased previously that they're going to be bringing to the market, to the public offering. You've got Goldman Sachs, Morgan Stanley, Bank of America, Citigroup, J.P. Morgan, Barclays, Deutsche Bank, RBC, UBS. Like every major bank is a part of this deal, omitting Jefferies.
Yeah.
So if you're listening, you're watching, and you're hearing something from an angle, most likely those people have a pretty good financial reason to tell you about this.
Yeah.
Yeah.
And we'll get into some of this, but that's one of the interesting parts to this is, so many IPOs are primarily around, hey, raising capital. Yes, there's a liquidity, a desire for liquidity for the original founders or early investors, but raising capital has never been an issue for these private companies.
Mhm.
I mean, I forget like Anthropic, OpenAI, just in the last year or two have raised, I think it was one of them raised $65 billion in the private markets. And it's like, well, SpaceX is just looking to raise like $75 billion.
Mm-hmm.
So it's like, okay, if they can go get the money they need, is this really, trying to tap into capital markets for that? Or is it just a liquidity event for early investors?
Mm-hmm.
Two different things. Doesn't mean one's right or wrong or bad, but
What's your personal opinion?
of what they're doing.
Mm-hmm.
I mean, I think it's a liquidity event for early investors. And I think I was reading something the other day that was talking about, they've changed, and we can get into some of this in a second. They've changed so many rules about who can invest in this, when you can sell, if you already own pre-IPO, and all of these rules, Fidelity and Schwab, they're giving like 30% of the shares to basically retail investors. So they've picked like Robinhood, Fidelity, Schwab, Trade PMR, E-Trade. There's 5 or 6 custodians that are allowed that have gotten this, that can deliver it to their, account holders. And those custodians have dropped the levels of like, hey, you only need X amount of money. Like Robinhood, Trade PMR, I think, and E-Trade, like there's no account minimum. It's like, so I say all that to say, like almost anyone and everyone has the opportunity to be a part of this if you really want to be. And I don't think that's necessarily a good thing.
Mm-hmm.
Because it's like these early stage investors who've been in on it for years are now transferring shares to your everyday investor at a very, very high valuation, a company that's not profitable, trading for, coming out valuing at almost 1.8 trillion. I don't know. It just kind of smells weird in the short term.
Yeah.
Now, it doesn't mean long term it's not going to be a phenomenal investment. Maybe the best company ever, but it just in the short term, it's like, man, we're kind of setting the stage for what, I don't know, may not play out very nice for a lot of people. That's my personal opinion.
Yeah. No, I kind of agree that I think expectations are just set weird on the streets. Like if you've never really dove into anything like this, or you don't even know what financials mean, you don't know what a market cap is. I've heard from more people. I always do my father-in-law because he's the worst investor of all time. And I say, I hope he watches. He knows. He says it to me all the time. And
No hard feelings.
No hard feelings. He's always complaining that he times it wrong.
Yeah.
And anyway, he doesn't listen to me. Anyways,
He doesn't listen to me.
but
The best investor of all
the
time.
best investor of all time. What I was getting at is like when he starts bringing up stocks, it's like, oh, we're at the top.
Yeah.
So like when you're average, I mean, he's HVAC his whole life. So like when you're blue collar employees who don't look at this at all,
And they're like,
I
hey,
want to get in on this.
Yeah.
That's when you know, like, okay, there may be a little bit of
The hype might be a
little high.
Yeah.
I mean, earlier this week, I talked to somebody who was like, yeah, what if I just put $1,000 in and it turns to $50,000? And then I had to explain to him, well, for a company valued at 1.8 trillion to 50x, it would be 20 times larger than the current largest company. And he was like, yeah, like 6 months. And so just like setting expectations.
We're not
of
talking
like,
penny stocks.
yeah, if somehow you got in at the 135 price and it became the largest company in the world, it would be just shy of a 3x.
Yeah.
Right. And so it's just like making
Which
sure,
is great.
which is an incredible return,
But
but like setting expectations of like, you're not paying off your house with $100 into space, like 2 shares of SpaceX.
And that's
right?
why I think that's why I think people just if you believe in SpaceX and the story of SpaceX and what they're trying to do and what they're building, then great. Like buy it, throw it, put it in the closet, and like look at it in 10 years and see what happens. But like this idea that there's going to be a short-term opportunity. I hope that's not why people are wanting to get into it.
And to be fair, I think most of us would say that we can get behind and are excited about the opportunity that is within SpaceX.
Mm-hmm.
It's the valuation, the way that they're bringing it to market, the changing of market structures that is being proposed and passed that makes us just kind of sit on our heels as people who are responsible for managing risk for clients.
Right.
And so it's not that we don't believe that something like Starlink isn't powerful for the entire world and bringing internet to places of the world that will have never had internet at a cost-effective way is not something that is a huge story that is worth investing in and has really good potential future growth. Like that should cost something, and you're willing to take a loss at the current market to say, okay, I know that this is coming, but all of the steps that it's taking, Elon Musk is the best stock promoter that there has ever been.
Mm-hmm.
And there probably will ever be. And he's doing a darn good job of promoting this stock and managing the market dynamics to promote the stock in a way that makes it fiscally beneficial for the backers and fiscally exciting for the people who are coming in. And so there's a couple things that have shifted that I think are just worth noting. One thing that Elon had really pushed for is early inception into indexes. And so if you don't know, in the stock market, you have passive investments, something that like tracks the S&P 500, and then you have active managers, people who are actively taking a choice to pick and choose different companies. passive indexes track an index. If there's a company that's worth 5% of an index, then they have to hold that company at a 5% exposure because of the way that indexes work. And so if Elon's pushing for this early index exposure, he's pushing for early exposure to the allocations within those passive index funds,
Right.
which make up over 50% of the market right now.
Yeah, so like if these funds follow their own rules, then they're basically forced to say, okay, we have to buy.
Correct.
Right.
Correct. So he had, and it was stated that the S&P 500 index was going to adopt SpaceX 10 days post IPO, which is unheard of.
Yeah.
That's not something that is
Because
passed.
usually there's like profitability requirements and
Correct.
things that they
and
have
it takes
to
a
meet.
year. You have
Yeah.
to be profitable for a year to make it into the S&P 500 index. Well, it hadn't happened. And so got that pushed forward. So basically what was going to happen was SpaceX was going to have to IPO. All of the hedge funds were basically just going to have to hold SpaceX, knowing that they'll get a small bid-ask spread once the index adopts it and pulls it in 10 days off of their books. And so that was likely going to happen. Well, now that just changed. It went from 10 days back to the regular
To a year.
1 year standard time. And so that's a huge amount of liquidity that this IPO now is not going to have in a short period of time. So there's a couple things that are just adjustments that Elon's pushing for, fishy from investor's perspective. That's really interesting to sit and watch. Do you want me to get into the?
Yeah, I think we
what I
talked through
brought?
the Eli brought. So we both keep up with. This was from the Compound, right?
This is from a guest that was
Yeah,
on the
that
Compound.
was on the Compound and Friends.
The Compound and Friends is a show. They're a phenomenal show. Really worth watching this interview.
Yeah, no, absolutely.
specifically.
We could maybe even link it, just so you can click on that specific interview
But
because it's really good.
They had a guest on who used to work in the banking industry, brought companies to public markets, and now he writes a subreddit basically of different investment topics. And
Yeah.
his name is not the most professional name. It's Blind Squirrel Macro.
I love it.
But Blind Squirrel Macro, what he's done is he's laid out the IPO and what it would take to actually fund this IPO.
Yeah, just the numbers behind. Here's what they're trying to do.
Yeah. So SpaceX is IPOing at 1.75 trillion. The target free float's 4.3%. So the base offer on the IPO is $75 billion that they need to raise at IPO, at the initial public offering. And you also have to pay the banks for raising it. So that's called a green shoe. So the total deal size puts you at $86 billion that they'll need to raise to bring this company to market. Well, basically he goes through and he says, okay, with what they're expecting to get from retail, what they're expecting to get from the indexes, what they're expecting to get from active managers, there was a shortfall of about $16 billion. And that was when the S&P 500 was counting them in the index. So his 16 billion at the time is now 28 billion short of the 86 billion that they're needing to raise. And that can create a lot of downward pressure in the stock price. If that is true. If they need to raise 86 billion, they're 28 billion short. Well, that proves something to the market.
Yeah, demand's not there. You know, yeah, we'll link to that because I think it's a great. Some of these guys. This is a niche part of what we do, and it's like there are experts that like focus on that, and we just, it's great to lean on them, and I think he does a good job explaining just the math behind. Here's what an IPO is. Here's what is actually going on behind the scenes, and for this to work out well, here's everything that has to fall into place, right? And I think he even goes on to say like, hey, tin can hat kind of comment here, but like 1% chance this doesn't actually happen, or everything doesn't come together. And I don't even know what that means necessarily.
We'll see in 3 days.
Yeah, but all of this is happening in the next few days. I had a chart I wanted to show just talking about, I know we're kind of just rambling about SpaceX here, but that just historically speaking, other mega IPOs historically and how they've performed 12 months out after the IPO. And so we'll throw this chart up on the screen. But this is Alibaba, Visa, Meta, General Motors, Rivian, AT&T, Snap, Uber, Medline, and UPS. And 12 months forward, the average is down 28%, right? And so a lot of these companies, some of these companies have gone on.
Is there an outlier that's pulling it down?
Rivian is a huge outlier.
Okay.
Yeah,
I wonder what it'd be X Rivian.
20.
Okay.
I mean, 15 to
Yeah.
20. It would still be very negative because there's a lot of them are still very negative. But Rivian is definitely the worst. But it just goes to show some of these have gone on to be, winners, obviously, over the long term. But these IPO'd at much more realistic valuations just in terms of the size at the time. Not to say there wasn't still a lot of optimism that had to be involved, to raise the money and do well long term. But just goes to show history doesn't bode well for huge IPOs in the short term. And that's why I think going into this, you have to have a long-term perspective of, hey, I might need to own this for 5 years before I ever even consider, selling or looking at an opportunity.
Well, just by nature of how it's priced based on future cash flows. And so to benefit from the future cash flows, you have to hold on to it for a period of time because it is priced for a perfect,
a very
future
different scenario
cash
than their
flow.
current.
Correct.
So, yeah. So positioning size, is important here. Don't get out over your skis on
Yeah.
something like this. Like if you get involved, make it in an amount that you can completely forget about, that you don't need, that you're not dependent on for years. If that ends up playing out, it needs to be the case. I'm also I don't know. I'll preface it with this. The worst investment over the last 20 years has been betting against Elon Musk.
Oh, for
Yeah.
sure.
Okay. That said,
It's the other side of that coin for sure.
I'm not in on this whole space outside of Starlink communication.
That was a big one.
Communication and defense. Okay, I get it. Like I can understand that. Well, I actually don't understand it, but I can see the value there. Revolutionize a lot of things, but this all the other space stuff of hey, we're gonna go to moon and mine iron ore and some of these things he tosses out there. I'm just it's not that I don't think we could potentially do that, but there's a difference in being able to do that and making it a profitable, worthwhile venture, right?
Yeah.
And so it's are we on this mission with Elon to just prove that things can be done, or are we actually building businesses that are going to make a lot of money and be great investments? The Starlink communication side of that can fully understand. All the other stuff is just
You guys ever seen a map of all
Tough.
the Starlink satellites?
oh, that's wild.
Isn't that crazy to look at?
Yeah.
If you're listening to this podcast,
Well, I'll put a screenshot.
We can
up.
put a
yeah,
screenshot up.
we'll put a screenshot on the.
That is crazy.
I mean, when I saw that, I was like, oh, okay, maybe there's something there.
There's
But
a few bucks to be
There's
made.
a few, yeah.
Well, it's a historical week, and it'll be really interesting. I think the overall, we've narrowed in and focused specifically on SpaceX this morning, but this also, the overall market will react to how well or poorly the SpaceX IPO does, right?
I mean, there's several angles to that too. One thing that's really nice, or one thing that is exciting about the SpaceX IPO is the liquidity that will be introduced into the market. Now, people won't be able to sell immediately, but they can take margin. There's ways to access the capital once it's public. And that can be a stimulant into the economy. And what we've seen is this year has been a kind of the opposite of a stimulant into the economy with gas prices raising. People were expecting tax refunds to help, but it didn't because basically all that got eaten up with gas price increase. But something like this, when you introduce $70 billion worth of capital that was previously tied up in mutual or hedge funds, banking balance sheets, now that's introduced back into the market.
Yeah.
That can be a pretty significant stimulus.
Gets reallocated, gets
Definitely.
spent or whatever.
Yeah.
Yeah. No, it'll be really interesting to see how all of this unfolds. Any other thoughts or takeaways on the SpaceX IPO specifically, or kind of the events this week?
No, I think it's really interesting, especially we briefly touched on it, I think before we started recording, but usually there's rules. Elon's changing all the rules that you can sell. If you own pre-IPO shares, you have to wait 180 days to sell, and they have this now tiered
profit
selling thing, and then there's triggers if they are more profitable. It's insane.
Yeah.
It's all crazy. and it's going to change tomorrow.
Yeah.
Which, regardless, or needless to say, that
Mhm.
basically just points out the need not to listen to propaganda in this, because a lot of people's liquidity is tied to the success of the company post IPO.
Mm-hmm.
If the company goes up by 30%, then more liquidity is added into the market. Well, if I'm a person who wants liquidity, I've got a balance sheet with way too much SpaceX, and I need to sell it for my hedge funds. Just like now, my fiduciary risk for the hedge fund, like I'm going to try my hardest to get this thing to work so that I can get the liquidity for my fund. So just like all that I think we're saying is this thing could be fantastic, but in this current market environment, this short-term market environment, there's a lot of hands in the pot.
Yeah.
And they all have their own different objectives that may not be aligned with what your objectives are.
And short term can be a very long time. Like short term can be a year or two, right? I think sometimes people hear short term and they're like, oh, the next few weeks or the next quarter. And it's like, no, short term may mean a full year or two. I mean, you look at the chart I showed, on how IPOs performed 12 months forward on the biggest IPOs in history. It's not great, and that's a full year out. It's not like, hey, it sold off for a couple weeks and then it went higher. So, just be patient and keep your positioning to a level that makes sense for you. That can be justified from a risk perspective, and it'll be fun and interesting to see, as we start to get more visibility into the financials. The first quarterly earnings report's going to be, I'm sure, incredible and super interesting. So, everybody's going to be looking at SpaceX through a magnifying glass for the coming quarters and years, and so it'll be really interesting to just keep up with them and see how they do. All right, any parting words of wisdom or thoughts before we jump off? We had a really good email question that I didn't really prep for this week, but we'll try to get to it next week. Pretty detailed question that we can kind of talk through. But anything else?
Great. Excited to see where this goes.
I know.
June, Annuity Awareness Month.
Annuity Awareness Month.
We'll end on that. All right. Well, as always, we appreciate you guys watching and listening. Give us a like, subscribe, shoot us an email with any comments or questions that you have, and we'll look forward to seeing you guys next week.
The hosts of the Market Moment podcast are employees of Mach 1 Financial Group, LLC. Mach 1 is a registered investment advisor located in Rogers, Arkansas. A copy of Mach 1's current written disclosure brochure is available through the SEC website and available at disclosures.mach1fg.com.